Welcome back to CEO Money. Happy Friday to all. I want to thank everybody for joining us this week. Joining us next also is my buddy Heather Endresen, Senior Lender at Live Oak Bank. Heather, welcome to the show again, and thank you for coming back.
Thank you for having me.
Well, last time we talked, we tried to talk. I don't know what we actually did, but there were some things that I wanted to cover that we didn't get a chance to necessarily cover that I think are really germane to the environment with regard to business acquisition at the small business level and the independent sponsor level. So one of those things are we won't go back over the historical stuff, but give us some ideas about some of the poignant and significant changes that have occurred from 2017 to 2018 when it comes to SBA lending.
Yeah, so the SBA came out with their latest update of their SOP, their Standard Operating Procedure, January 1st, 2018, and made a number of fairly significant changes to the business acquisition portion of the program. And the first one, but most significant, was they reduced the equity injection requirement from 25% down to 10%. So in many cases,
hold on a second before you go on there, Heather.
Yeah.
Why would they do that?
Well, it's an interesting process. It really had to do with the fact that they were allowing seller notes to be considered as part of the 15% equity injection if those seller notes were on standby for 2 years. And we heard a lot of talk at the SBA that they didn't like that. They didn't want sellers notes to be part of equity unless they were on standby for 10 years. So what they did was they kind of made a compromise, and they said, okay, we're going to change it from 25 to 10, but if the seller carries any part of the 10%, that seller note has to be on a 10-year standby for it to be considered equity.
So if it's not part of that financing, you don't have that standby. Is that what you're saying?
Yeah, so basically now it's kind of a little bit easier for most deals to be structured. So what we would now do is have the buyer come in with 10%, and that can be from their own cash or from equity investors. A lot of times it's both. And then they also come in, we structure a seller note because it makes sense to do so, usually for another 10 or 15% of the deal. But there's no 2-year standby. There's no 10-year standby. The seller could begin making payments on that note, or the buyer could begin making payments to the seller right away. So
that's one of the things that's one of the things that came into play when we look at some of the things we've tried to do. That was a pretty significant surprise for me, to put it lightly. I guess go ahead. I'm sorry I broke in on that first. Those changes, but go ahead, because I know there's a couple other things that are very important you want to get out also.
Yeah. So the other changes are that strategic buyers. So if you already own a business and you're looking to grow through acquisition or partner buyouts, but this applies to both, could actually use their existing enterprise value towards that 10% equity injection. So what that means is, in many cases, when we look at the pro forma combined enterprise value, it's large enough that they don't have to come in with any cash. So we could effectively do almost 100% financing or 100% financing for a strategic buyer or for some partners.
For those that may not have a real good feel for a strategic buyer, can you kind of define that for our audience?
Yeah, it's just a term that we use for someone who already owns a business, who's going to buy a business that has some kind of synergy with its business model. Either it's the exact same thing and they're just going to combine them and reduce costs, or it's similar. Maybe it opens up a new sales channel, but it's generally the term that we use to describe someone who's already got a business and is buying an add-on business to roll up into that entity.
That brings up an interesting other question. If you had a scenario where you were rolling up and you had existing business with an existing SBA lien against it, how do you combine? Do you combine those two loans, or do you have a separate loan, or how does it work to create the acquisition?
Yeah, so we can't. It's very cumbersome to combine SBA loans. So usually we just leave the existing SBA loan in place and we add on another SBA loan. It does make it a little more challenging if you didn't want to go with the same lender. In other words, if whoever made that first SBA loan, hopefully you chose well and it's a bank you want to stick with, because it will be very difficult to do the second SBA loan in that kind of a scenario with a different bank. So kind of another point is be really careful that if you have that kind of strategy that you're thinking about, that you select a bank, an SBA bank that is comfortable with business acquisition lending, because they really aren't all super comfortable with it. A lot of SBA lenders are more comfortable with real estate lending than they are with acquisition lending.
What would be, obviously in real estate, you have a pretty significant portion of the I guess the equity in this case tied up in a hard asset that becomes pretty good collateral. Is that something you typically would see with SBA lenders where they would more likely have that collateral in lieu of a pure acquisition?
Yeah, so it's a big issue. So SBA lenders who primarily lend on real estate deals tend to look at a business acquisition deal when that comes across their desk through that same real estate lens, and they get kind of more nervous that they don't have adequate collateral for a business acquisition. In most cases, we don't have any real collateral, especially in the case of a service business. So what you'll find is a lot of SBA lenders tend to really be collateral lenders. So you have to choose, and you have to find a lender in acquisition lending who is focused on cash flow. Puts much more emphasis in cash flow than they do in collateral. And with a few good questions, you can figure that out pretty quickly.
This is true. When you look at the landscape of buyers, acquirers right now, we kind of went through this a little bit last time, but who do you see as the main acquirers using SBA financing for acquisitions of existing businesses?
Yeah, so it's shifted a bit over time. In the past, I'd say 4 or 5 years ago, we saw more folks that were sort of individual buyers retiring from a career and using 401k money to invest in the business, that kind of thing. We see a lot less of that today and a much more professional group of buyers that kind of come in two forms. One, the independent sponsor, which we've talked about, being someone who's generally got deal experience through investment banking or private equity, and will be using a lot of their own capital, maybe just a little bit of family and friends equity capital along with debt. And then the second group of professional buyers is really an interesting new group. We call them search funds, and these are young MBAs who are coming out of our top schools in this country, and they've been taught how to acquire a business, how to raise equity, how to raise debt through these programs called Entrepreneurship Through Acquisition, or ETA. So they're the younger ones. They'll usually pick for their first deal fairly simple business models, and they will raise most of their equity from investors.
I can relate to that one myself. Heather, we have about a minute left. What if you were advising someone looking to do this going forward, what one golden nugget would you give them?
Pick the lender that can lend on cash flow.
Okay.
If you can find that a lender, that's what Live Oak Bank does. I'll plug us a little bit there. We're able to do a lot more than our competitors because we lend on cash flow and because we focus very specifically on acquisition SBA lending. Perfect.
Heather, if people wanted to get a hold of you at Live Oak, how do they do it?
Endresen at liveoakbank.com or phone number 714-404-3648.
Perfect. Heather, again, thank you for joining and thank you for being my friend. I really appreciate it.
Thank you, Ed. Look forward to talking to you soon.
Perfect. Heather Endresen of Live Oak Bank. We'll be back on Monday with more great content. Remember, go to our website, WFN1.com. This last section was brought to you by our title sponsor, Tycon Partners. We'll be back Monday again with more great content.